In this video, we're going to have a look at the fringe benefit of residential accommodation. Now, this fringe benefit arises when an employer gives an employee a place to reside for domestic purposes. And in order to calculate the determined value, the 7th schedule says that the employee needs to be taxed on the rental value less any rental consideration that the employee paid to stay in the accommodation. Now, the rental value is what we need to learn to calculate, and this depends on whether the employer owns the accommodation that the employee resides in, or if they rent it, if the employer rents it from another party. So to calculate the rental value where the employer owns the accommodation or where the employee has an interest in the accommodation. So that means that the employee is either a sole owner of the employer, or at some stage they could become the owner of the property that they're staying in. Then the rental value for the purpose of this fringe benefit, remember, a fringe benefit is an amount that's included in gross income. So it's like a cash salary, but for some other benefit. So where the employee has an interest in the accommodation or the accommodation is owned by the employer, then we will use this formula that you see on your screen to calculate the rental value of the accommodation. And let's run through each of the A, B, C's and D's in this formula so that you know where you're going to get the amounts from. First of all, A, that's the remuneration proxy. Now, a remuneration proxy is the amount of remuneration excluding this fringe benefit. Now, remuneration is defined in the 4th schedule of the Income Tax Act. Any remuneration that's received in the previous year of assessment is referred to as the remuneration proxy. And there's special rules if the taxpayer wasn't working for this employer in the previous year of assessment. Then there's rules on how to calculate the remuneration proxy. If they only worked for a portion of the previous year, then you need to get an annual amount for the remuneration proxy. So make sure you go and have a look at those rules. But in general, it's the amount of remuneration, excluding this fringe benefit, that the employee earned in the previous year of assessment. B in the formula is a set amount, and this amount changes annually. It goes with the tax threshold for that particular year of assessment. So make sure that you have the updated amount for the year of assessment that you are working with. Now, it's a set amount except in 2 situations where the employee controls the employer. So if the employee is a controlling shareholder in the employer, then B will be nil, or where the employee has an option to own the property at some future date, then B will also be nil. If we look at C for residential accommodation, C is 17, except where it's a house, flat or apartment that's provided to the employee, and it's got at least 4 rooms. That's not 4 bedrooms, it's 4 rooms. So kitchen, lounge and 2 bedrooms. So where it's a house, flat or apartment consisting of 4 rooms, then it'll be 18 if the apartment, flat or house is either furnished or power or electricity is paid for by the employer. So one of the two. And it'll be 19 where the accommodation is both furnished and power or electricity is paid for by the employer. So you need to have a look at that situation that the employee is in. So it's 17 in all circumstances except where it's a house, flat or apartment consisting of at least 4 rooms. Then if it's furnished or power is supplied by the employer, it's 18, and it's 19 if it's furnished and power, meaning electricity, is supplied by the employer for the employee. And then lastly, D in the formula, that is the number of months in the current year of assessment that the employee is entitled to stay in the accommodation. So they're entitled to the right of use of the accommodation. Where the employer rents accommodation from a non-connected person, so it must be an arm's length transaction, then the rental value is the lower of the formula value, that was the formula that we discussed in the previous slide, or any expenditure that's been incurred by the employer. Okay, so also included in this fringe benefit is temporary holiday accommodation that's supplied by the employer to the employee, where that accommodation is rented by the employer for the employee. Then the amount that will be included in the employee's income tax, gross income, as a fringe benefit is the cost paid by the employer, and this includes all meals, refreshments, and services that are paid for by the employer. Where the accommodation is owned by the employer, then the amount that will be used to calculate the rental value is the rate per day at which the accommodation would normally be let to a non-employee. And of course, in both situations, if the employee has to pay any amounts for the use of the accommodation, then you can reduce that rental value by the consideration paid by the employee in order to calculate the amount that will be included in the gross income of the employee.